What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig. We're going to be taking a look at the US 10-year yield. Then we're going to take a look at Bitcoin and Dow Jones. And then we're going to take a look at our Tesla chart. Definitely stick around for this whole video. I know a lot of people are super bullish, so we're going to look at the bullish case for Bitcoin. Although I don't think it's the same numbers that you're seeing everywhere else. If it gets another high, we'll talk about where that might be. We're also going to talk about the small time frame, the trade that we're in now, and where I believe it's headed and why, and where it could go from there. So if that sounds interesting, definitely smash that thumbs up. Leave your comments down below. Let me know what you think of the video. And make sure you subscribe to the channel and tick that notification bell. That will get you notified when I post new videos. All right, so this is the 10-year yield. We had talked about this for since we called this before the break, right? And that was back in May of 22. All this has taken a lot longer than expected, but nevertheless still seems to be heading in the direction that we expect. I'm looking for about a 7% up to 8.29% target for the 10-year yield. We'll see what happens there. As long as it can stay above this trend line right here on the broadening wedge, I do believe we will end up seeing these. Now let's take a look at Bitcoin. So this is the Wyckoff distribution schematic number 1. This is a possibility. These are the two bullish cases I'm going to show you, and then we'll go on to the smaller time frame, and then I'll take a look at the big picture, what I see is possibly happening here. Now, if you are in the camp that Bitcoin's going to go up to 100,000, and just be careful. That's all I'm going to tell you. None of this is financial advice, but usually when people are expecting that 100K, which they've expected since 2020, right? We don't get anywhere near it, and we come crashing down, and nobody takes profit and then loses everything, right? But don't forget, there's always still a possibility that could happen. Although I'm not in that camp, I haven't been in that camp, I still think we have a new lower low coming, but there is a possibility we get a high before that. Now, looking at the Wyckoff distribution, right? We talked about this back at 61,000. Actually, it was like 57,000, and I told you to look for a top at 64. And then we came crashing down to 29. So let's take a look at what this looks like. Where we got it here. So here's the first one, right? If this is the case, we talked about right here the sign of weakness, getting our bounce. If this holds, which there's no guarantee that's going to hold, right? But if it does hold, we could see a break of this high sometime in June, somewhere in there. That could be up somewhere in the 75.5 to 76,000 range. And then another down spell, just like we have over here, right? To approximately 61, 62,000, and then up for one more high, just a wick to 76, 77,000, and then come crashing down. That is one possibility. Now let's take a look at the next one. This is Wyckoff distribution schematic number 2. Remember, these are the bullish case scenarios. So if we were to look at this would still be the same thing. Get one more high up to here, to the up thrust, just like right here, right? If we were to do that, that would get us up to approximately 75.6 to 76,000, which would also be in that May to June area, right? If this was to happen. And then another, and that would be the final high there. So either way, if we do stay above the sow here, we could definitely see one more wick up to this area. Now, will that be the last one? Time will tell, but you can see what happens after that, and I think we will go to our new lows then. Now, let's get into the smaller time frame. This is the sponsor of the channel, Prime XBT. Great exchange, whether you're trading Forex, gold, silver, oil, S&P, Dow Jones, crypto. You can do it all from one exchange, and you can trade it all against Bitcoin. So you can, if you're an accumulator, you can trade against the markets with the Bitcoin to make more Bitcoin. If you use the link down below, it'll bring you to this page. You can have up to a $7,000 deposit bonus, 25% off your trading fees just by using the link down below. Also, like I said, they do sponsor the channel. If you are interested in following me on Twitter, I will also put out some promo codes that will give you a $200 account with no deposit required. It'll just put 200 in your account. You can trade it and keep the profits. I'm going to post one of those later. I'll give people time to watch the video, and it'll just be a random series of numbers and letters, and you put that in your promo section on your Prime XBT account, but it has to be signed up with my link. So, and that'll get you the 200. I'll start passing them out. I've been kind of busy lately. You guys know I built a new house, have a bunch of property. I've been doing a bunch of work outside. It's a little rainy today, so may not be working outside. May have more time to do some stuff on X. All right, so this is what we're looking at now. This is the big wave count, right? The yellow. We'll bring the RSI back in a second, but I gave you this possible scenario of wave 1, 2 back in the end of April, or actually beginning of April. First week of April, we talked about this being a possibility to that 51.7, 51.8 range. And what that is you put your trend-based fib up to the top of wave 1, the bottom of wave 1, up, whoops, didn't even work. Top of wave 1, bottom of wave 1, up to wave 2. That gets you to the 1.618, and that's that 51.7 to 51.8 range. And that's still what I'm looking for, unless, now here's what you guys got to watch and understand about Elliott wave. So in each big wave, like the third wave, there will be 5 waves. And I told you to watch for this to be wave 4, as long as it doesn't break wave 2, right? Which we did not. So my scenario brings us to a extended wave 5 all the way back down to, and this is the wave 5 of wave 3. I know this is confusing, but you can get some damn good trades in here. So now what I was talking about, shorting up at 4, riding it down to 5, longing at that 51.7 to 51.8 range, all the way back up to this 56.8 to 59.7, and then another short all the way down to around 42.85. Now, how did I get these targets? Well, if we take from the top of wave 2 to the bottom, if we hit there, and then you can put your wave 4, which it'll either be 56.8 or 59.7, and that will give you your next targets. Now, let's take a look at this wave 3. If you guys remember, I'm talking about the blue wave 3 with the yellow. I know this sounds confusing, guys, but definitely should learn this stuff. So if we put the fib retracement on there from the top of wave 2 to the bottom of wave 3 in the blue, right? What we were looking for is to possibly hit that 0.618, right? That would invalidate it, actually. That would invalidate this as a wave 4 right here. But it does seem like we are heading towards the downside, of course, unless we break the bottom of wave 2 again, which is 67,500. That would invalidate this smaller count. Does it invalidate the bigger count? No. Of course, unless we break the high, and then we look at that Wyckoff method, the Wyckoff method, right? But this is still what I'm looking for. As long as we don't break that 67.5, I'm looking for a bounce at 51.8 up to 56.8 to 59.7, and that would just be a retracement, right, of this wave to the 0.236 or the 0.382, the wave 4 retracement. You can see how they line up with the fibs here. And then continuation for wave 5 down to around approximately 42.8, 42.9, somewhere in that range. And then look for a long there. Could that long go to a new all-time high? That's the question. So if you were to get to this level and long here, it could be a big trade. Just track it with stop losses as you break. Like, here's another thing I want to show you. If we look at this big picture, each one of these fibs lines up with the high volume node. So this all is looking damn good. So from here, this could be a wave 1. Then we get a wave 2, and then we really get the downside. But you can ride that wave 2 up quite far, guys. What I'm telling you here is there is massive opportunity coming. If you are a trader and understand markets, this will make sense to you. If you are just a moon boy and think that Bitcoin is going to change the world and it's going to be the new currency, then this isn't going to make sense to you because you are stuck in a mindset, right? All right, so anyways, let's take a look at the big picture. This is what I've been talking about. As you guys know, when we were here, I was thinking that was this top, the Amazon bubble. But if you look at it, it does look like a triple top here, just like we had in the Amazon.com bubble. And you can see what happened. It returned to where it began. And that is usually what happens. And I still believe, even if we see another new all-time high, that there's going to be way better buying opportunities between 37 and 9,700. I've been saying that for a very long time. And in all reality, nothing has really changed here other than I miscalculated the timing and the tops of which ones. But you can't really tell what's going on until the whole pattern's formed, which seems to be the case. We'll see what happens here. Now, let's take a look at the DXY. As you guys know, I'm looking for the 108. If that breaks, I see it going much, much higher. And if you guys understand anything about inflation and bad economy, the only thing that's going to fix that is a recession. Reset of the markets, crash everything. Big boys get richer than they already are. Well, they take everybody's money that is sitting in the markets thinking they're going to go higher. And the dollar value goes up when everybody's putting fear into the dollar to get everyone out of the dollar, right? Because the dollar is going to hyperinflate, which is a possibility. I don't see it happening. I see the dollar still remaining the big boy. But that would get us up somewhere around 116, somewhere in that range. But I do believe there's more upside for the DXY and the 10-year yield. The Dow Jones, same thing. Could this be a 5-wave count coming down? Our 4 could go as high as, we could go all the way up to the 39,000 to 39,100 range, which would be the golden pocket zone, and it still would not break wave 1. Or we just reverse from here. But either way, I do see lower lows coming. This was our first target for the bounce. Went a little lower. Nevertheless, we got it. So let's say, right, let's take a look at this and take a look at this as wave 3 down, waiting for wave 5 up. And if we've already topped out on this bounce, that would get us down to about 37.1-ish. If we go up higher, that's going to change our targets. But either way, we have lower targets as low as 36,000. If we look at the big picture here, that would be retesting the bottom of this rising wedge here. Now, in the case that everything goes up for one more huge leg up, Dow could come up to retest the top of this rising wedge, get up to a 44,000 before the crash. Nevertheless, once we break this trend line, guys, it is going to get ugly. As you can see, another pattern. We had our high, low, higher high, lower low, bam, blow off top, and huge crash. People are saying it's not the same. They couldn't print the dollar back then. It is a market. It is big people understanding the market, controlling the news to take your money. What better way to take your money? Get you in all crazy and think the markets are just going to have a pullback, It's going to go higher, which, like I said, is a possibility. But when this thing comes down, you're probably not going to have time to get out. And even if you do have time, you're probably not going to believe that it's going to go down as far as it could. And it could be so ugly. I've been warning about this for a long time. The biggest money grab in history. I still think it is a very good possibility. And I'm going to stand behind that because all the markets are showing warning signs that people just don't want to talk about. For one thing, answer this question for me. Do you know people that just have normal jobs, or are you a person with a normal job? Compare to how they're living now to how they were living 4 years ago, 5 years ago, right? I guarantee they're not better off than they were 4 years ago. You cannot tell me the economy is strong, everything is great, people are doing great. People are struggling, people are getting second jobs. Guys, the only way for this stuff to correct is a huge recession, crash everything. It's going to get ugly for a lot of people. A lot of people are going to lose a lot of money in the markets. A lot of the smart people are going to sell in these ranges, or even if it goes a little bit higher, sell, get out, actually take their profits, right? Because unrealized profit is not profit, guys. That's why I prefer to short markets and to, buy after big crashes. And I think this is going to be one of the biggest ones in history. I absolutely cannot wait for the opportunities that are going to come. Buying houses for pennies on a dollar, luxury cars, watches, tangible items for pennies on the dollar. All right, Tesla. We've been talking about this. I'm still in the looking for the range of 40 to 50 bucks. We've been looking at this since back in 22. Once we broke this trend line right here, told you watch for a retest. We got it almost exactly where we thought it was going to be, and then your next step should be 40 to 50 bucks down here. Then after that, I am looking to buy here because I believe in the, maybe in the next decade, 5 to 10 years, once we break this, it's going to be massive, right? This is one of my big buys that I'm waiting for patiently. Have a lot of people panicked, got back in here, got back in here. I'm not panicking. I do believe this thing is coming down in a big way. Elon can make his little tweets or his little X comments that, now they're going to come out with that cheap car again. Guys, these guys are playing the markets and they're playing you. Just be careful. XRP, you guys know my thoughts on XRP. This thing's been a dead project since 2017 with just a bunch of hogwash reports and announcements and claiming to be partnered with banks. I can be a partner with a bank. All I have to do is give them some. Let's say I make a coin, Savvy coin. I give some to a bank. It's worth a little bit of money. The banks are going to, I say, just play with it. Tell me what you think. Once they accept it, I can claim I'm partnered with them. Doesn't mean shit other than they can just sell the coins and take the money, right? There's no true partnership with XRP in any bank. Like any bank is really going to use it. I don't see it. Let me know in the comments below why you think I'm wrong and what bank is actually using it, not just accepted some BP or XRP to play with. I'm not saying Ripple as a company can't do something good, but XRP, there's no use for it. They can make any coin to run on that Ripple Labs protocol. So just be careful out there, guys. I really don't want to see people get crushed. And if you didn't buy this rally, you didn't get crushed. You only get crushed if you buy the tops, right? And then it comes crashing down. So be careful out there, guys. Much love. Smash your likes. Subscribe to the channel. Watch out on Twitter X. I will be shooting out some promo codes. So take it easy. Have a great day. Love you bunches. Bye.